Let's get some facts. 37% of you aren't subscribed to this channel. That's almost 4 out of 10 just freeloading the alpha. So come on, hit subscribe and I promise to keep leveling up the show with the best guests and the juiciest insight. Go on, do it now.
Hi everyone, here we are at day 2 at Solana Breakpoint conference in Abu Dhabi, and today we are joined by Mike Cagney, co-founder at Figure. Mike, how are you doing today? Thank you for joining us.
I'm doing great. I flew in last night, so I'm jet lagged. Doing fine other than that.
Fantastic. Yeah, that jet lag, it takes some time, but glad you're doing okay. So, definitely, Mike, I wanted to get your take on, kind of what you expect to happen in the crypto markets in, 2026 and perhaps beyond.
Yeah, look, I think a lot of interesting things, and part of why I'm here at Breakpoint is some of the work we're doing, bringing real world assets, yielding assets into the Solana ecosystem. And I think that push of getting more tangible real world assets into DeFi applications will be a big theme going into 26. And, we're uniquely situated. We're the largest real world asset originator on public blockchain. Today we're putting at least $1 billion of loans a month on public blockchain. And we're going to try to get as much of that as we can into the DeFi ecosystem. And so the launch that we did of Hastra, which we'll talk about today as part of Breakpoint, partnering with Camino and Radium and others to get that to stand up. I think you're going to see more of that, not just within the Solana ecosystem, but within the broader public blockchain ecosystem.
Right. And, I want to kind of talk about, the success of your IPO and some others, what does that kind of tell us about the crypto? You guys had a very successful IPO. Some others like Circle have had their IPOs. What do these IPOs tell us, about the crypto market?
I think the most important thing is the public market's ready for a blockchain story. And, if I go back 2 years ago, not only was the regulatory environment too difficult to go public, the SEC didn't like the concept of the public blockchain company. But the public market wasn't there either. And people didn't really understand what the opportunity set was. And, I remember when I first started going out with Goldman to do test of water meetings with investors, Goldman would say, you got to tone down this DeFi stuff. People don't understand what you're talking about. And then Circle went public and did so well. They said you really need to play up the DeFi angle and everything that you're doing in terms of the IPO piece. And so, I think, and one of the things that I spoke to a lot of investors about, and I firmly believe this, just like we have a magnificent 7 of Web 2.0, I think we're going to have that same emergence in Web 3.0. And I hope that Figure is one of those companies. I think, again, given what we're doing in the real world asset space, given what we're doing bridging TradFi and DeFi, the amount of sell side and buy side firms we've brought into blockchain, the first transactions they've done have been with us. I hope that we're going to be one of those companies, but I think we are going to create this magnificent, I don't know if it's 5 or 7 or 8 companies or whatever the number is, but there'll be an emergence of a Web3 ecosystem. And the public market, I think, is very aware of that. And I think it's great that they're leaning in and getting exposure.
Right. And I want to kind of stick with that. That's the success of the IPO, because Figure is up significantly since that IPO. And it's happening when the broader crypto market has been underperforming. Why have you guys found success within these current market dynamics?
I think there's a couple of dynamics to it. I think one, Figure just is an exceptional operating business. And because of the way that we use blockchain, we've extracted so much cost out of traditional fintech 2.0 operations. Mm-hmm. Our third quarter, we did $160 million in revenue, but we did $90 million in income. And those are numbers you don't often see as the first earnings report of a company going public. But I think more importantly, people are looking at what we're leaning in on the innovation side. And certainly what we're doing with Hastra in terms of getting RWA exposure into the broader DeFi ecosystem is important. But a couple weeks ago, we announced that we're going to do effectively a second IPO. Now, this is just secondary. We're not raising any capital for Figure, but we're doing an IPO where our stock will be native on public blockchain. So it won't be on DTCC. It won't trade on the NASDAQ. It'll be native on Provenance blockchain. We'll be able to bring it over to Solana into the same way that we've done with our loans. It'll trade on our alternative trading system, which is a self-custody, self-settle, self-clear alternative trading system. Functions just like a decentralized exchange. And it'll allow for the concept of wallet connect versus introducing broker. And so people are seeing what we're doing, just pushing the boundaries. We've already established that blockchain is hugely valuable in the credit ecosystem. I think we have the exact same value prop in the public equity ecosystem. And I think our public equity offering will be the first of very many behind that are going to take advantage of being on native blockchain.
And I want to kind of talk about a little bit about DeFi and, kind of crypto lending, because I want to know essentially how has that changed? How has DeFi and lending and borrowing in crypto space changed since, the collapse of, these BlockFis and Voyagers? What have you guys learned from that? And, what are some lessons you're going to take forward?
Well, I think one of the key things that came out of Celsius and some of the others is self-custody is very important. And the issue is, well, how do you self-custody and encumber collateral? Well, that's what multi-party computation wallets do, right? So MPC wallets, in my mind, are one of the most important innovations we've had in the blockchain space in the last couple of years. And it effectively, eliminates the need for a centralized custodian. And so, self-custody is super important. Non-rehypothecation is super important. I think what we're seeing more recently is, and we saw this obviously with Terra Luna, but even more recently is the algorithmic constructs of yield don't tend to be stable. And what we're getting a lot of resonance on is, if you look at a product like Athena, for example, the yield there is coming from selling the forward, buying the spot, getting the carry. It's somewhat of a complicated process, and it works in certain market environments and not in others. We're bringing U.S. mortgages, and it's a lot easier for people to get their arms around where that yield's coming from and the stability of that yield. And so I think what we're going to see, again, going back to a 26 trend, is more yielding assets coming to chain, accessing DeFi protocols from a liquidity standpoint.
Now, and with all of this, I think stablecoins, right, play a major role in this. So I want to kind of ask you, how are institutions viewing stablecoins, and how is this working in your broader strategy?
Yeah, look, I think that the Genius Act really has opened up an opportunity for stablecoins to be truly disruptive, because I don't think they could have been disruptive up to that point. The problem we've always had with stablecoins is we've not had utility with them, right? I can't go to Starbucks and buy coffee with stablecoin, and I can buy Bitcoin with it, but I can't buy coffee. What's going to happen with the Genius Act is I think Chase and some of the other very large banks are going to build rails that will work on coin. That will mean that I now have utility. I now have a competitive product to a bank deposit account. That's going to pull liabilities out of the banking system. That's going to create a bunch of interesting dynamics around who finances that credit. I think that's where DeFi comes in. I think a lot of those loans go into DeFi. I think a lot of those deposits that are now coin held by us, we apply that into DeFi and generate that yield, right? So we disintermediate the bank as the yield aggregator, and we just do it directly. But one of the things that we're pushing on, we actually have a version of stablecoin, a yielding coin called Yields, because we're not very creative in how we name things. And with Yields, it pays you an interest rate backed by treasuries, freely transferable peer to peer. We're offering this up to banks as a competitive alternative to what JP Coin's going to be, right? That, JP Morgan's going to come in with a reward coin. It's going to have all these bells and whistles. And we're saying, well, look, we can give you a security version of this that pays interest. And if we get enough ubiquity, we can build payment rails off of that, right? And so I just think the legalization of stablecoin was what was necessary, and the Genius Act has done that. And we're going to see an enormous amount of innovation coming into the space. But a lot of that's going to come out of the TradFi side.
Now, is there anything that you want to see in regulation and policy that you think is going to help, whether that's stable coins or whether that's figure and the overall markets business?
So there's three things that I'm very focused on and that I've been lobbying very hard for. The first two are relatively pedestrian, or might sound pedestrian. I want to be able to use a security version of stablecoin to settle Bitcoin, for example, and not have to do that on a regulated exchange. And I think there's a strong argument for that. I want to update the antiquated transfer agent rules, because today the transfer agent, the rules are they need to give best efforts to get your name and address. My view is a wallet address is sufficient, because what you're really doing is trying to drive quorum, and I can vote off the wallet. In fact, I'm more likely to vote off the wallet than through snail mail. The third most controversial is I really want to make sure that DeFi is recognized for what it is, which is bilateral peer-to-peer transactions, not security transactions. And this is probably the most controversial aspect of the Clarity Bill and the market structure bills. But I think it's one of the most fundamentally important. Unfortunately, I don't think our industry is completely aligned on that concept. So I think that there are centralized players that don't understand why people are squealing so much about the DeFi and the need to protect DeFi. But the reality is that is what blockchain is, right? Is most fundamental principles. It's decentralized finance. And I think if we lose that, we're going to lose an enormous amount of the value it's going to bring into consumers. And one of the things that I'm doing with the senators and the Congress folk who are voting on this, I just had a meeting with one from Georgia, and I said, look, we funded $1 billion of loans to Georgia residents, and we've saved them a lot of money because of DeFi. And if it goes away, that goes away. Your constituents suffer. And so, we're able to bring something very tangible into the lawmakers around how DeFi actually benefits their constituents. And it does in a significant way. And as an industry, we need to be more vocal about that and more communicative about that. And, I didn't want to go to DC for the prior 4 years because there was no upside in me ever being there. Only bad things could happen. I'm finding myself there all the time now, which, isn't necessarily great, but it's an important thing to be doing.
Yeah, no, absolutely. For the industry, it's definitely important. Now, have you found, because it definitely seems like, in the previous maybe administration and the last cycle, seems like that wasn't, they weren't really pro any of this, right? Are you finding it now, especially with, kind of the historic election for crypto that we just saw? Are you finding that Washington is more receptive to DeFi and kind of wanting to protect? Are they understanding that conversation?
Yeah, so, certainly the administration, certainly the current regulators, if Chairman Atkins, if his views could be codified, that would be great. Right. And that's the risk that we have, that we need to get those views into law, because another chairman can have a very different interpretation, as Gensler did before him. And so, the environment is much more favorable. And again, I think on the Democrat side, bringing tangible use cases as to how blockchain and how DeFi in particular benefits their constituents, in particular the lower income constituents, is an important thing that we have to do to advocate for. And I think that we have a window to actually get some real stuff done.
Yeah, and I'm liking that we're starting to see this be more of a thing that both kind of sides of the aisle are finding a little agreement on, which is ultimately great for crypto. Now, I want to kind of switch gears a little bit and talk about Solana, because we're here, of course, we're here at Breakpoint. Why is Solana interesting to you?
So I think one of the things I really like about Solana is the builder community here. And if you look at the ways we've stepped in with Solana, the first thing that we did is we agreed that we'd start minting yields native on Solana. And what that does is it gives all Solana builders a yielding stablecoin that not only provides the utility of a stablecoin, I think it future-proofs the ability to get money on and off the ecosystem. It wasn't too long ago that we were running out of banks to get fiat on and off of blockchain. And obviously that's changed, but again, that can change with another election. Having a security is very different than having a crypto asset in terms of your ability to get fiat on and off. And so we think what we've done is we've provided a foundation for builders on Solana to leverage that yielding coin and do it in a future-proof way. But the more interesting and second thing we're really leaning into is just getting more real-world yielding assets onto the Solana ecosystem. And so, what we've done is we've stood up Hastra. Hastra allows you to buy wrapped yields and pledge it in for a Prime token. That wrapped yields is effectively going to our DeFi marketplace called Democratized Prime, and it's lending against figure HELOCs. And that's where the yield's coming from. And then you're taking that onto Camino, you're looping it, and you've got liquidity on Radium, an Oracle from Chainlink, all the pieces that you need to get this process to work. And I think that there's an enormous opportunity to scale that. And so, we want to lean in aggressively and be part of that. And we've always said, I don't believe there's going to be one L1. And maybe I'm not supposed to say that when I'm at Breakpoint. I don't want Tully to come and yell at me about it. But the reality is I think there's going to be lots of them. And the interoperability is important. And, and we really like the builder ecosystem in Solana. And we're happy to be leaning in and helping on that.
Yeah, no, absolutely. You see it here. There's so many dApps being built on Solana, so many developers here. It's really, it's quite impressive, honestly. I want to talk about because you guys have been, working on a lot of products. You've been bringing a lot of great products to market that we haven't really seen before in this space. So what's coming next for you guys, or how are you guys thinking about kind of what you're going to innovate next to bring to the market?
Look, I think the thing we talked about earlier, just getting public stock on the blockchain, on public blockchain, and the level of disruption that brings. Because if you think about what's most disruptive and sort of what's probably most competitive to a lot of my peers, having a dApp and having a wallet means I attach the wallet into that dApp. That dApp is the exchange, right? That's where I trade.
Right.
I don't need Robinhood to let me onto the exchange anymore, right? So what you're really doing, and this is sort of a battle of technology, consumer technology. You know, the Robinhoods of the world are still in the super app construct. They're like, we're going to build an app to do everything. You're going to bank on it. You're going to broker on it. The company I founded, SoFi, that's their ambition as well, right? My view at this point is you're going to have a self-custody wallet and you're going to attach the best dApp for whatever it is that you want to do. And that's really what we're making a big bet on. And so we're disentangling a lot of our infrastructure at Figure, and our loan origination platforms adapt, our equity trading systems adapt, our DeFi marketplaces adapt. We believe those dApps will have to be competitive to all the other ones out there, but it's a wallet connect construct. So that ability to eliminate the need to go through Robinhood or Schwab or whoever it is to be able to access the equity market and just attach to the wallet, right, and trade is hugely disruptive.
Right. Oh my gosh. So this has been a great conversation, Mike. I want to ask you, what would you want someone to take away from this conversation? If they remember one thing about this conversation, what would you like them to understand?
Hastra is a great yield. So that's one of the things. Look, I just think it's a great time to be in the blockchain space. I think, with the headwinds we had in the regulatory side in the prior 4 years, the amount of building that's going to happen over the next couple of years, it's going to blow everyone away. So it's just a great time to lean in. And obviously people's moods ebb and flow with the price of Solana or Bitcoin or other things. And, you got to keep the long-term perspective in terms of what the outcome is here. Crypto is a long game. Right. And we've always said that. And a lot of people come into it in a very short-term horizon, but it's a long game and it's going to change everything.
Yeah, I often have that conversation with people that are very short-sighted and they want to make everything by tomorrow, right? But you have to change your time horizons because we hear this so often that we're so early, but in the grand scheme of things, we really are, right?
We are.
Yeah.
We're in the very first inning. The amount of blockchain will be responsible for more reallocation of public equity market cap than any technology ever has. And we're talking about trillions and trillions of dollars that are just going to disappear on one side and show up in new technology that's disintermediating the old regimes. The interchange networks, the Visa and MasterCards, the custodial processes, like all these things, what I just described, the entire brokerage construct, right? All of it's at risk. And I think if done the right way, blockchain not only will displace it, it'll be massively better for the consumer.
Well, Mike, it's been a pleasure having you. We're definitely going to look out for that great Astra yield and what else you guys are bringing to the market. It's been a pleasure. Thanks again.
Thanks for having me.
Of course.
So you obviously like this video enough that you've got to the end. That's quite a big task. But listen, do me a favor. Hit the like and subscribe button and also check out what video's next because I think you'll love it. But if you want even more, and when I'm talking more, I'm talking about member-generated ideas, incredible alpha, research, everything there to help you in your journey, just head to realvision.com/join for the best financial intelligence out there and the pure alpha that's within the platform.